All right. Hello, everyone. Evening. Okay. Hi, everyone. All right. Hi, Jason. Hi, City Chai. Nice to see you again. Hi, Josephine. Hi, Anthony. All right. Now, if you can hear me right now, type the word sound, all right, in the comments, and I know I can get started. All right. Now, so we, as usual, every week over here, we have a couple of Facebook users that will pop up. All right. So if you see the banner at the bottom that's scrolling across the screens, okay, could you do us a favor? All right. Just click on the streamyard.com slash Facebook link in the post to this Facebook live session. All right. And then click to approve StreamYard for Facebook use over here. All right. Now, when you do that, we will be able to start seeing who are leaving comments on the back end of our screens over here. All right. So it would be really great if you could assist us. All right. Give me some time. In the meanwhile, I'm trying to detect who are some of you who are actually leaving comments right now. All right. That we did not pick up. All right. So we have Josephine, Kelvin. All right, Kelvin. All right, Kelvin, I think this might be one of the first time you're joining us. So could you click on the streamyard.com slash Facebook link? All right, just approve it. So we'll be able to actually see that you are the one leaving comments. All right, and beat Lim as well. All right, beat Lim as well. All right, and Vincent Yong as well. All right, okay, Vincent Yong as well. All right, and Anthony. Okay, all right. Now, so for the rest, I think we are more or less good to go. All right, and without further ado, let me go through Wave Rider. It's not on the banner over here, all right, but it's pretty much a post over here that you will see, okay, in the Facebook live session. All right, it's actually a clickable link inside the wordings of the post. All right, so try to look for it. All right, but Wave Rider, I can see you. All right, so I can see you, so you're not an issue over here. All right, we can actually see your profile. Yeah. All right, so if I can see your profile over here, that means it's fine. All right, so you don't have to do anything. All right, so unless you appear like this on the back end, all right, then we will need you to actually click on the links. All right, so you'll be able to approve Facebook for StreamYard use over here. All right, now let's get ourselves started. And as promised, all right, as promised in the post over here in the Facebook leading to today's session, I will be providing a market update over here before we get things started. And first, and not forgetting everything, let's talk about Tesla. Yeah, all right. Now let me first put a very clear disclaimer. I have absolutely no vested interest. All right, I have no vested interest in this stock. All right, we are not growth stock investors in our community. All right, so I would rather give these stocks a miss, all right, and focus on generating cash flows and income, all right, rather than trying to chase the stock. All right, and one of the reasons why I do so is simply because chasing after such stocks will lead to very, very high volatility swings. All right, so many people were still trying to chase the stock at 750 levels, all right, and hitting 900 levels. And anybody who has bought at 900 levels will be left punished by the markets very, very quickly. All right, as you see, we hit 900 at the beginning of this year, all right, in the month of January, all right, and it's just 1 month later, all right, 1 month later, all right, and we have a 30% down move over here. All right, and if you do understand a little bit of technicals over here, all right, at 900, it is a very, very clear signal that you should not be chasing this market. All right, and one of the reasons why I say at 900 you should not be chasing this market is simply because, all right, from this point, right, from this point, all right, leading to the 900 high, all right, the stock price was actually leaning higher, right? But you could see that the indicators over here, all right, was actually forming a lower high over here. It means, all right, or it's trying to actually tell you that the higher prices is not being participated, all right, by the strength and the momentum behind this move. Right now, so think about it this way. All right, if you're trying to push a block of a large rock, all right, a large rock up a slope, all right, up the mountain. All right, now as you go higher and higher and higher, all right, you can start to see that your strength is actually getting weaker and weaker. All right, and this is just simply not sustainable. All right, and when you start to see something like that, all right, that's already your first warning shot. All right, so I've made a couple of posts back then that I said the danger levels are getting higher and higher on Tesla. All right, and it's soon enough market turnaround on Tesla. right? And why am I actually starting to pay attention to Tesla right now? Because many of my students will know that I don't like talking about Tesla, right? One, because we don't focus on growth stocks, right? But now, right, I'm actually being forced to, right, by its inclusion in the S&P 500. Yeah, right. I'm forced to talk about Tesla because trying to focus on the market, right? What you want to also do is you want to focus on some of the biggest stocks that can actually move the entire index, right? And Tesla is definitely one of them, right? We start to see a lot of weakness, right, in the markets over the last week, all right? And Tesla has been leading, all right, this weakness over here, all right? And of course, together with the tech sector. Now, so can you imagine, all right? Imagine that, we have the big techs over here that are worth, close to $1 trillion, all right? We have our Apple, we have our Microsoft, we have our Facebook, all right? And most of them were weak, all right, as technology was going down this week. All right, and if you add that on to Tesla over here, you have literally like $4 to $5 trillion in market cap that is trying to push the market down. Yeah, right. So yes, you may have your financials that are going up and still staying strong this week. You will have your oil sectors that are still staying strong this week. Yeah, all right. But they're just simply not enough to keep the market in a positive mode, right? But on the flip side, if they were to participate on the downside, yeah, all right, you would actually see a much bigger risk and bigger down move than what you've been seeing so far this week. All right, I've taken a couple of screen captures, and what I found out was this: when the market was actually for a time period. All right, let's go back to the S&P 500 over here. All right, let's do SPX. All right, there we go. All right, now, so for the period of time over here where let's bring it down to 15 minutes. Right. Okay. Now, so this was where we were in the markets yesterday. All right. And, up until about 2:45 a.m. Yeah. All right. 2:45 a.m. over here. All right. Markets. All right. Was actually, how do we say this? All right. Markets was actually only 80% correlated. That means out of the entire S&P 500. All right. Let me try to find a screenshot that I took for all of you over here. All right, there we go. All right, now it's a little bit small, yeah, all right, but if all of you could see over here, right now, what I did over here was just to go to the markets over here when it was still open, yeah, right? Yes, I was actually watching the market last night. Yeah, okay, now, so we had like 420 decliners over here, all right, with about 80, all right, that was still advancing. Right, so some of these were the oil stocks over here and the utility stocks, right? And you can see over here at that point of time, the SPX was actually down by 1.95% or down by about 75 points. Yeah, okay, and this is a market, all right? This 75 points is happening, all right, when not all 500 stocks were all red. Now, so can you imagine if we have one of those totally correlated days where every one of those 500 stocks were actually in the red? All right, now we could be seeing those over 100 points down days over here in the markets. All right, so that's what I'm trying to highlight and trying to bring, all right, to all of your attention over here in today's session. Yeah. All right, now, so let me try to see if I managed to capture something else over here. Try to open the other file. Nope, this is not the one. This is not the one. No, I didn't manage to capture it. Pardon me for a minute. There we go. I found it. Right now, this was after the market closed, right, when I took it sometime at about 3 p.m. today. Right, so this is as of the market close over here. So, we had slightly better situations, right? So we had 424 to 81, right, when the market was down at the bottom, right? And then, of course, we rallied into the close and the S&P recovered about 25 points, all right? And that's because another like 20 stocks, all right, started turning positive for the day. Yeah, right now. So imagine, if we had start to see a massive correlated sell-off in the markets. And, markets right now are just unable to keep their up move, right? So right now, it seems like the market mode has changed a little bit, right? It's changed a little bit into buying on dips, all right? Buying on dips when the markets are falling, right? Into a mode right now where you should be looking to sell on resistance. Right now, I talked about this a couple of times when we had this sell-off over here, right? But every time it sold off, yeah, all right, we had those buybacks over here that was staying very strong in the markets. Yeah, all right. Now let me try to change this to the dailies. All right, so we had these dips over here where we had the rally backs, all right, which actually took the S&P to a higher high. All right, now so as long as it breaks the last resistance level, all right, that means that the bullish mode is actually still in play, right? But what has broke the back of this market is actually the same thing that happened to Tesla, all right? So if all of you start to see over here, we have that lower high that's happening right now, right? And that's actually coinciding, all right, coinciding with the movement that we see on the stochastics. Yeah, all right, the stochastics. That means the strength is actually following the move on the downwards over here. Now, so what we want to see right now is that maybe we will start to see a kind of a rally, and if there is a rally, we will actually want to see it go all the way back to the 50 moving average. And yes, the S&P 500 has broken the 50-day moving average line. All right, and the 50 days moving average right now is at 3820. All right, so 3820 right now is the breaking point. All right, so that's probably the first resistance that the market will face on the upside. Yeah, okay, and that's probably a point where you can look to sell into the rally. All right, and above that will be the 3840 level. All right, so we broke the 3840. Yeah, okay, and it pushed with strength on the downside over here right after that. Now, so when we had this break over here, I did a market update as well, and I basically said, all right, that if it bounce up, look for the failure to make a new high. All right, and that actually happened, and we led to the second sell-off where we are right now. So right now, okay, it might be a market situation where you start to see a series of lower highs in the market. All right, and as long as you see a series of lower highs that are supported by the indicators, which means if you load up the RSI, you load up the stochastics, all right, and you start to see that they are all forming lower lows, all right, okay, as the market is going lower, yeah, right, it basically says that the market right now is in sync. Right now, and I want to point to all of you something that's actually how do we say this? Pointing towards the possible end of this game of musical chairs over here. Right now, we all know, and I've said this a couple of times, that the daily charts should give way to the weekly charts, which means the weekly charts are definitely more. How do we say this? Are definitely more indicative of what's happening. Yeah, all right, and a significant trend that will be happening over here. And if you look at what's happening over here, the last time, all right, I'm going to zoom in a little bit over here, so all of you can see something that's very, very visible. Right now, the last time we had this MACD over here, which crossed over, yeah, all right, that means the faster line crossing from above to below, all right, and turning the histogram into red zones. Right, the last time we had this significance over here, right, on the weekly charts, which is the long-term charts, was actually during the COVID market correction. Right, that's actually in the the crossover happened at the end of Feb. All right, and then it peaked right around the middle of March or towards the end of March. And that was the very last time we actually saw the histogram turning red. Right, but if you look at it, what's happening right now this week, all right, if all of you can see, all right, on the weekly charts, all right, on the weekly charts, the histogram has turned red this week, everyone. Pay attention to that. The histogram has turned red on the MACD this week. All right, and that's something you really, really want to pay attention to. Yeah, all right, because right now the technical indicators have turned around. All right, it's pretty much hit the high over here. All right, and then after that came off. All right, so right now we has broken the 3840 support level. All right, and we're coming back inside the Bollinger Band on the weekly charts as well. Yeah, okay, the 50 days moving average will be the next challenge. All right, because the weekly on the weekly charts, the 50 days moving average sits at 3357 right now. Okay, now that's of course still a little bit far from where we are right now. Okay, but that's definitely a possibility. Yeah, okay, because technicals, they will always look to the longer time frame and then try to go to the shorter time frame, all right, to try and time some trades into the markets. Right, so this is going to lead the market and what's going to be expected. Yeah, okay, so one thing we're going to see over here is definitely a lot more volatility, all right, that's going to kick into the marketplace over here. All right, so I expect to see a lot more volatility kicking into the marketplace. Yeah, All right, now, so having said that over here, I'm going to go back right now into the portfolio for this week. All right, everyone. All right, so let me go back to our agenda. All right, now, so going back to our agenda for our weekly Facebook live sessions on Friday, okay, now it is labeled as portfolio building for cash flow with Terence. All right, and we do this live every Friday with one simple aim and simple goal. Right now, whether you are within our community of investors or you are, you're not yet within our community, all right, all we're trying to do in this public sessions is to show you the strength behind option selling. All right, so we are a community of option sellers, all right, and we are trying to show on Friday sessions how you can actually go about building, all right, a portfolio in the stock market, right, with selling option positions, all right, rather than buying the same stocks that we're trading on. All right. So, for example, if I believe that from a fundamental angle, all right, AT&T is a very good, strong fundamental company and is currently trading at undervalued valuations, right? That means the stock is really, really cheap at this moment. Yeah. Okay. Yes, the market may come off right now. Okay, but you must understand, even when the market is coming off, right? When you have one of those great companies that is already being sold, right, to an extreme level, that means it's already severely undervalued. Right, there's not much room that they can push this stock downwards, right, any further. Right, if you also couple the knowledge that certain industries, certain business industries are actually defensive in nature, right, you will also come to realize, right, that when markets are selling off and when markets start to panic, right, money actually flows into what we call defensive stocks and defensive sectors. Right, this is because money needs to be parked, right, in a certain industry, certain kind of stocks, all right, while the traders try to analyze, all right, where should the money go next. Yeah, all right. Now, this is really down to unit trusts and funds, which cannot hold too much positions in cash. Right. So when they start to feel that there's certain threats in certain stocks that they have heavily invested into, all right, they start to move some of these funds, all right, to prevent a downside on their portfolios. Right, so this is where they move the funds into these defensive stocks, right, which you kind of realize and see, all right, that this stock benefited in the sell-off yesterday. Yeah, all right, okay, now we are into some of these stocks and positions as well. All right, now, so that's what I've been doing over the last couple of weeks, all right, with my stock positions that we have built during this portfolio sessions. Now, so we are trying to sell put options over here, all right, in this segment, all right, and the only way we are going to do this, all right, the only way we're going to do this in this Facebook live session is to do what we call selling portfolio puts. Now, when we say selling portfolio puts, all right, all we're doing over here is selling put options on stocks, all right, and we are willing owners of these stocks if we are actually assigned on them. Yeah, okay, now, so that means we're actually selling put options with the intention of owning these stocks, all right, if the prices break below the strike prices that we are trading on. Yeah, okay, now, so because of this nature, right, every position that I take on, right, we put on what we call cash secured puts, which is actually putting up all the capital that I need to buy those stocks and to pick up those stocks, right, if there's a need to, and in the event that it actually happens. Yeah, okay, now, of course, in my community of members and option sellers, all right, they would actually learn to do the same strategies and probably the same trades, right, for a fraction of the investment. Right, so usually our investments are about 10 or 20% of what we're looking at, right, in these sessions over here. All right, and yet we are not taking on additional risk. Yeah, okay, so if you'd like to find out more, right, do consider one of our many mentorship packages that we have available. Yeah, all right, where it always involves live trading sessions as well. Yeah, okay, now, but apart from that, let me try to get back on to today's agenda. Okay, now, so let's review our portfolio and what we have done so far in our current existing positions. Right, so we have AT&T over here, right, and AT&T is definitely a beneficiary of yesterday's sell-off. Right, so let's quickly have a look at AT&T charts, right, and then we'll look at the current premiums as well. All right, now, so AT&T has a surge up, all right, this weekly charts. Right, as the market sold off this week, all right, AT&T has actually benefited from the sell-off in the markets. Yeah, right. So you could see Monday, Tuesday, Wednesday, Thursday. All right, it was a straight up week over here for AT&T. Now, so many of you were, pretty much saying, Terence, when you took on this position, it doesn't seem like it was going on an uptrend. It doesn't seem bullish at all. Yeah, right. And this is coupled back to our criteria over here, where we only work with a certain basket of stocks. All right, and within this basket of stocks, I'm very clear of the fundamentals of these companies. All right, and when they trade within the undervalued zone prices, Yeah, all right. All I need, all right, is a certain clarification, all right, and then I will put on those trades. Now it's very clear that we are beneficiary right now, and we're definitely in a position to take some profits right now. Okay, now so we have the 16th of April 28 put option for $1.16. All right, let's check the premiums today, all right, and see if we should be closing any of these positions. Yeah. All right, so let's see 28 puts. Right now, so AT&T right now is trading up about 40 cents today. That's about another 1.3% for today. Right now, and 16th of April, the 28 puts are about 57 to 59 cents. So I should be able to close it at the middle. All right now at about 57 or 58 cents over here. All right, so what I'm going to do is I'm going to pay 58 cents and get it closed, everyone. Yeah, all right. This option still has about 7 weeks to go. Right, so I'm going to close it over here, all right, by paying 58 cents, which is the current ask price in the market. So I'm pocketing half the premiums over here, all right, in about a month. Yeah, all right, we opened this trade on 29th of January, all right, so we are probably about 5 weeks into this trade, all right, and pocketing more than half of the premiums, all right, by closing it today for 58 cents. Right now, so we are pocketing $174 in cash flow net, right, by closing this trade today. All right, and today's date is the 6th of Feb. Yeah, all right. No, today's 5th of March. Sorry. Oh, I got my dates wrong. All right, 5th of March. Okay, all right now. So this trade is officially closed, and we are closed for another winning trade over here. And this elevates our requirements for any capital, right? Because we've closed off this position. All right now, another winning trade for our portfolios, which has done really, really well so far, whether the market is in corrective mode or is in a profiting mode. Right. Another trade that I want to take management actions on, right, is actually going to be CPB. Right now, why again? Because CPB is a beneficiary of the market sell-off. All right now, so let's have a look over here. All right, so CPB. All right, we have Monday, Tuesday, Wednesday. No, sorry, Monday, Tuesday, Wednesday, Thursday. All right, so we started on Monday at $45.51. All right, and we are up about 50 cents for the week. All right, I'm not sure if we get a decent profit, but let's have a check on the current premiums. All right, we have a 19th of March. Okay, let's check what trades we have. We have a 19th of March, $44 put option. All right, let's check the current premiums. All right, it's about 70 cents. All right, so nope. All right, we can't close this trade as yet. All right, so it's only a small profit right now, so we can't do anything we want on this trade. Now let's quickly check on CAH. All right, so I have a 16 April over here on CAH on the 50 strike put option. All right, 50 strike put option. Now that's worth about $1.30. All right, $1.30 today. I still think it's going strong. All right, so no, I'm not managing this position. All right, let's check our hedge. All right, our portfolio hedge of the VIX index over here. All right, so the VIX index obviously has a spike. All right, over the last two sell-offs. All right, on Wednesday and Thursday. All right, so we might be able to close it right now for some profits. All right, now this expires in about 1.5 weeks. All right, now so this option expires on 17th of March, which is about 1.5 weeks away. All right, so the 21 puts, all right, it's going to cost about 20 cents to close it today. All right, so I'm going to pay 20 cents and get it closed. All right, everyone. All right, have a look over here. The 21 puts over here for 17th of March. All right, so the current ask price is 20 cents. All right, so if you give them 20 cents, it's a definite close. All right, it's a definite close. All right, so pay 20 cents and get this position closed over here as your portfolio hedge. All right, we've done well on our VIX hedges over here so far. Yeah. All right, so we're closing it today on the 5th of March as well. All right, so we're pocketing $120 on this trade. Yeah, all right, $120 net cash flow on this trade over here. Right, another winning trade. So we have executed 38 live trades since starting this portfolio on the July 2020. All right, we have been assigned on one stock so far, which is Nokia. All right, and also EV. All right, so we've been assigned on two stocks. Right, but we are left holding onto one stock right now, and with 4 other positions open. That means we have 5 trades that are open so far, right? And all other 33 remaining trades were all winners, right? That means they were all profitable trades over here. All right, so our track record stands right now, all right, together with all of you at 33 out of 38 live trades, right? 33 out of 38 live trades with 5 still open at the moment. All right, so we're doing really, really well, and all these trades are being built live, right, together with all of you. Yeah, all right, so we're showing live prices, trades that you can, get yourself into, right, together with the markets, all right, and this is where we're at. Now, so let's quickly look at what I can put back on right now. Okay, because obviously I closed a hedge position. I want to put back on a hedge position as well. All right, so since I've closed the 21 put option on the markets, all right, and that's because the option is expiring. All right, what I'm going to do right now is I'm going to put back a hedge. All right, I'm going to put on the 22 put option right now. All right, so I'm going to move to the 21st of April. All right, so I do believe that the market will still sell off. So I still want to have that VIX or volatility index hedge position in my portfolio, right, to cover some downside moves, right, in case it happens. Right now, for all of you who are unfamiliar, when the market goes down, right, when the market goes down, the volatility index actually goes in the opposite direction. Right, it's a measure of fear. Okay, now, so I'm targeting the 22 put options over here for 21st of April. Right, for about 90 cents. All right, for about 90 cents. All right, so let's go have a look right now. All right. All right, hang on, everyone. I'm placing the orders right now. So let's see if we can get it filled. All right, so this option that we're trading has 46 days to expiry. All right, there we are, the 22 puts over here. All right, is it still going for the same price? That's about 85.90, right? 85.90. So I'm going to sell, all right, 3 contracts over here at 85. All right, I'm gonna put myself at 3 contracts over here, all right, at the current market price, which is 85. All right, we're done. We're filled. Okay, let me just show it to all of you and verify it. All right, so over here, just at the very same minute, the clock is 10:59 right now. All right, so this has a 1-hour difference on the platform. I have no idea why. Don't ask me. Maybe because they're showing Hong Kong time right now. I'm not sure if it's even 1 hour backwards right now. But this is the VIX April 20th, 22nd put option. Sorry, $22 put option. All right, I sold 3 contracts over here. All right, at 85 cents. All right, so 3 contracts done at 85 cents credit over here. All right, now, so let's go about recording this on our platform. All right, so I close this, right, but I'm actually putting it back and reopening it, right? And we have done this a couple of rounds over here on the VIX. Yeah, all right, we've done this a couple of rounds. Insert. Yeah, there we go. Clear this out, no fill. All right, trade number 39. All right, so we're doing this on the 20th April. 22 puts. We're doing this on the 5th of March. Just nice. One month later, right? 1 month later, right? Pocketing 85 cents credit. Now that will put $255 into our portfolios. All right, for cash flow from today's session. All right, how much margins do I need to put up? All right, that would be $22 times 300 shares because we're doing 3 contracts over here. All right, so $22 times 300 shares, that will be a margin of about $6,600. All right, $6,600, everyone. All right, so this goes back to 0. Right, that will put my current portfolio exposure at about $71,000 right now at this moment. All right, everyone, $71,000 of exposure right now. So I want to see if I can add on positions into my portfolio. I want to add on positions. Oh, what can I add? Market has been very tricky over here. This is the fix still. Yeah, all right. No. Let's see, what can I add? Okay, as all of you can see me analyze right now, all right, you will be very clear and you can see that, I can only go on the fly, which means just like all of you, I don't know what I'm going to get because market is so volatile right now. It changes every single day. Yeah. Now, so I do know my basket of stocks. I do know what I can zoom in on. All right. So I'm definitely looking to these stocks right here to try and get a good clue on where I should be positioning myself. Okay. All right. Now, so let's do this. All right. I think this is good. All right. I think I've got a good trade over here. So let me pull it back. Let me try to find the right option over here first. All right, 30, 30, 30. All right, now I'm going to do this over here, everyone. Now, so I'm going to take on a trade over here on Exelon. Yeah, all right, now, so why am I going to take a trade on Exelon over here? All right, now it's simple. The PE ratio is a little bit, it doesn't represent that it's cheap, right? It doesn't represent that it's cheap, right? But one of the reasons why I'm happy to do so on this stock and trade is simply because of the beta. All right, now you would see over here that the beta of this stock is actually 0.42. Right now, what it actually means is this: it is actually less than half correlated to the current movement of the S&P 500. All right, now, so that means it doesn't really move together with the S&P 500. And it's also logical to think so because EXC is actually a utility company, right? But they are a utility company that's a little bit different over here, right now, because they are a utility company, right, that is powered by nuclear power plants. Yeah, all right. So they're not your traditional ones, but most of their plants over here are operated as nuclear powered plants over here. Yeah, okay, now, so where am I? So let's run some fundamentals and show you what the company does. So EXC, Exelon. Right now, so you can see over here, Exelon is a utility service holding company. All right, so Exelon over here generates energy generation business. All right, so energy generation business. Now, so integrated business consisting of generation, physical delivery, marketing of power, all right, across nations. Yeah, okay, and they sell electricity and natural gas, all right, both wholesale and retail. Yeah, all right, both wholesale and retail over here. Yeah. Okay, all right, now, so this is their business. They're very traditional, all right, simple utility-based company, all right, and let's see, all right, earnings per share, it's positive, all right, earnings per share is positive, so nothing to complain about, all right, nothing to complain about, and I see an opportunity, all right, because it is a defensive stock, so if market really sells off, I think we have a good chance of seeing some money go into such defensive stocks over here. Right, at the same time as well, it is currently sitting at its 50 days moving average. All right, so I do think that might be a good place to add some exposure over here. Okay, all right, now, so I'm going to sell the $38 per option. All right, $38 per option. I'm going to go and give a try at about maybe 97 cents. All right, I'm going to give it a shot at 97 cents over here. All right, let's see if we can get ourselves filled. Yeah, all right, so I'm going to add this position over here right now. All right, please remember as well, all right, standard disclaimer applies. All right, I better put it up over here before any of you rush to go in. All right, all disclaimer applies over here that, if you do decide to take on any of the trades we are discussing, all right, okay, please make sure that you do your own risk assessments and judgment, all right, and that is suitable for your own accounts over here before following suit and putting those trades on your accounts. All right, everyone? Yeah, okay, because like I said earlier, I'm more than happy to be owners of these stocks over here. All right, and I'm putting up the necessary capital required, all right, to pick up 300 of those shares, right, because I'm selling 3 option contracts over here. Yeah, okay, now, so I'm well liquidated. Okay, now, so do make sure that you know your own risk, all right, and you're happy with the risk that you're taking on before submitting these live trades onto your very own accounts. All right, everyone? Now, I've submitted the orders, all right, you should be seeing it pop up over here. I missed the boat. Seems like I missed the boat over here. All right, see my order at 95 cents. It's sitting there. It's sitting there. All All right, now let's see what's the last done price. All right, let's try to figure out what's the last done price. Oh man, the last done price is 105. I don't want to lower myself too much further because I think that the market, may come off today. All right, market has just rebounded. The Nasdaq turned from negative to positive, right? And that's why we saw the premium jump back. All right, now, so I may have to leave this order. Right, I may have to leave this order to work over here and see if we can get it filled before the end of today's session. All right, I'm pretty much done, all right, with my market updates and trades for today. Yeah, all right, now, so if you have any questions, I can take a couple before we end off today's live session. All right, so as all of you can see, this is a 15 minutes intraday chart on the QQQ, all right, and we have the obvious reversal in the last 15 minutes, all right, the current 15 minutes, right? So this has pushed the positivity back into the markets, and I think EXC probably jumped a little bit as well, and our premiums came off. There we go. All right, it turned positive. It's a green candle right now. Oh my goodness. Yeah, all right now. So it's probably not going to end like that today. All right, so I'm just going to wait and see. Okay, I'm going to leave my order right now, okay, at 95 cents because markets are now currently in a sell-off mode, which means I don't want to chase prices. Yeah, okay, I don't feel like I need to chase prices. Yeah, okay, because I can always try the same trade and same order tomorrow if I don't get it filled. Yeah, okay, now, so I'm going to leave this order over here, and if I do get filled on my trading account, I will just leave a comment in this Facebook live video after the session, all right, to update all of you. Yeah, okay, all right, now, so let me jump to the comment section and see if I do have any questions over here. All right, so Ray Friday. All right, now, question on VIX. Now, why don't we let the March option expire while we open the April VIX trade? Yes, you could do so as well. Right, you could do so as well, but one of the reasons why I want to release the positions before taking on the new one, it's simply because you will realize, right? You realize that if I don't close this position and I open up the April position, what I'm doing is I'm doubling up my exposure. All right, I'm doubling up my exposure. Now, although I feel that the market, may come off, all right. Now, it doesn't mean that I'm going to be right 100%. Yeah, okay, so I don't want to take on those chances. There's still 2 more weeks left. All right, so if the market, sees a reversal and it starts pushing towards an all-time high, all right, then I'm going to be left with 2 positions right now that's going to go against me. All right, it's meant as a portfolio hedge. All right, it's not meant as a double portfolio hedge. Yeah, okay, now, so that's the reason why I closed one and I reopened again. Yeah, okay, I closed one and I reopened again. And the next reason is also because if I didn't close that, all right, that means that my total account exposure would be somewhere close to 78,000. All right, 78,000 will put me almost like 80% exposed, all right, with a market that's, almost moving into the sell-off mode. Right, and I don't want to be, that heavily exposed because, those of the attendees who have joined us live since our first day, right, would have heard this many times. This is a sample $100,000 account. Right, so this is a 100K account. So right now at 71%, I'm actually 71% exposed, right, with positions and invested into 71% of my total account, all right, with positions, all right, at a current market that's going into a sell-off. Yeah, okay, all right, now, so with that reason, that's why I'm doing so. All right, now I forgot to flash Wave Rider's comment over here and questions. All right, Wave Rider, all right, I hope you got that over here. All right, now, so yes, definitely. All right, okay, now I do feel that AAPL definitely has more downside. Yeah, okay, I don't want to leave too drastic comments over here because you must understand that tech is in a sell-off over here. All right, so tech is definitely in a sell-off. Let me do a quick one. All right, so what we have over here is Apple. Yeah, all right, now, and the reason why I say we are definitely in a sell-off is because, all right, it's broken this support level. All right, the last time Apple broke out, all right, as all we can see over here in December, all right, it broke out from 125. All right, and this sell-off over here has brought it back below 125. So it broke below 125 over here. It challenged, made a false break, all right, made a false break, went back into the Bollinger Band, and then the second round of sell-off came. All right, so right now, all right, you may expect a bounce. All right, any bounce should see resistance at 125 again. All right, if it breaks through 125 strongly, all right, then the next resistance will be at 50 days moving average, which is 131. Okay, if you can break that, all right, then we'll see strength over here. Right, otherwise, right now it's definitely on the downside. Okay, as you can see, the MACD primary trend, the histogram is red, right? And the two lines are also below zero, which is negative zone. That means right now, based on the MACD, right, the primary trend and the secondary trend, right? The primary trend and the secondary trend of Apple is actually down, right? It's actually down. Yeah, okay, now, and same reasons as well. We have that, you know, from this high to this high, we didn't have that much of a divergence, but let's look at the longer time frame. Oops. Right now, we didn't have the divergence on the stochastics, but we did. Yes, we did mildly have a divergence on the MACD. Yeah, okay, we did have a long-term divergence on the MACD over here. Yeah, okay, all right now, but nonetheless over here, the same problem right now. Apple is definitely seeing downside. Yeah, okay, seeing downside. Now for TLT, or all I can say is this, right? For TLT, it is not your retail traded product, right? So TLT, you know, follows the direction of bonds. Yeah, okay, so bonds are very professional, heavy product. That means only the professionals trade it. All right. That means your big size funds over here, your banks. All right. They are the ones that trade the bonds and the bonds futures. Right. And bonds futures over here will lead the price of what you see over here in TLT. Right now, and indirectly over here, when TLT prices keep going down, right, interest rates are actually moving in the opposite direction. Right. And that's actually bad. Right. That's actually bad because interest rates right now, right, is at a breaking point. Right, it's starting to reach a point where it's moving so fast upwards that people are worrying about it. Right, people are worrying about how it can crumble the economy. Yeah, okay. Now, at the same time, this is a catch-22 situation. Right, now I say this because if bonds were to rebound sharply, right, you must understand this. If bonds were to rebound sharply over here, it is also bad for the markets. What do you mean, Terence? Right, down or up now is bad for the markets, and yes. Because if it bounces back up too severely and too quickly, right, from this recent sell-off, what it's going to do is going to suddenly bring down interest rates. Because when it fell, it brought up interest rates very quickly, correct? Now, if it moves the other way, that means it's going to suddenly bring down interest rates drastically. And what's going to happen then? All right, because when TLT started going down, all right, what it did over here was this. At the same time it was going down that quickly, it was pushing the financial stocks up very quickly. Right now, so if it comes now and rebounds very quickly, what do you think is going to happen to the financial sector? It's going to go the other way. And it's simple to understand. The banks have rebounded because with higher interest rates, all right, the market basically expects better profits, right? Because banks are a loan business. All right, now they are a loans business. They take your money and they try to lend it out at a higher interest rates. So the higher the interest rates are, right, with the markets, the bigger their profits are. So, you know, if the TLT starts to rebound and brings down the interest rates, that will signal the opposite. That means that people will start to expect, oh, maybe, you know, the bank stocks right now ain't that good because the interest rate is coming back off. So maybe what we projected isn't going to be matched. Yeah, okay, so it'll bring down the financials. And the financials are very heavily weighted in the S&P 500 as well. Yeah, okay, now, so that's, definitely a concern that we may see happening in the markets going on right now as well. Yeah. Okay. All right. Now, so one last question over here. All right. Okay. One last question, and we'll end the session. I've overran it. Now, before I do so and answer Wave Rider's question, if you did enjoy the market updates, please leave a comment and let me know if it was useful to you. Right, because this is something that I'm trying to add on to this Facebook live sessions. So if you do find it useful and you would like me to continue doing so on Friday session, please leave a comment and let me know. Yeah, all right, you would love to be able to get this. All right, and also click on the like buttons and the share buttons. Yeah, right. If you found the analysis on Tesla and the market's useful for you, right, please click the like and also help me share the videos out and let people know, right, that if they want to find out updates on Tesla, where they can do so, right? Because Tesla right now, the risk, right, before I go ahead and answer Wave Rider's question, I forgot about this right now. I apologize, everyone. Right, so where's the risk on Tesla over here? Right now, the risk on Tesla is basically, as you can see, the levels. Oh, this is not good, everyone. All right, this is not good. All right, now I say it's not good because we have broken 600. All right, so like I said the last time around, if we break 700, all right, if we break 700, we should see 600 at the next level. Thank you, Adelaide. Yeah, all right, now we should see 600. And now, if we close below 600 today, everyone, all right, if we close below 600 today, all right, we might actually see 500. All right, so 500 is the next support for Tesla over here, everyone. All right, 500 is the next support. Now, we can also do something else. All right, let's do this as an analysis over here. All right, let's add another simple moving average. Apologies because I think the resources are being demanded on my computer. So it's lagging right now. Right, there we go. All right, everyone, I've just added the 200 days moving average line onto the charts as well. And the 200 days moving average line is only at 470. Oh my goodness, this is not good. It's only at 471. All right, 471. So 500 is definitely the next nearest support level that we'll see on Tesla. All right, and you know why I say this is concerned, because if Tesla were to drop from 590 to 500, all right, 590 to 500, that's another 20% drop on Tesla alone. All right, that's another 20% drop on Tesla. It's already fallen 30%. Yeah, okay, from the high of 900, right? From the high of 900, it's already fallen 30%. If it falls to 500 over here, right, that's a massive drop. That's like a 40% drop. And this is one of the reasons why you don't chase, all right, you don't chase these momentum stocks. You don't chase them. Yeah, okay, all right, period. Now, so this is the risk, right? This is the risk. Yeah, all right, now. So if it hits 500, the concern that I have is the drag on the market. Remember, I said this earlier. It is now an S&P 500 company, right? It is an S&P 500 company. So if Tesla is going to go down, right, it's going to drag the market down, right? It's definitely going to drag the market down, right? As you can start to see it happening right now as well. Because as you see Tesla going down right now, okay, you know, as it's pushing downwards, right, you can actually see that the S&P 500, right, is losing steam. Yeah, all right. Okay, now let's pull this to the intraday again. All right, it's coming off the highs over here where it was up by about 20 over points. Yeah, all right now. So you can see that in this 15 minutes, my computer is really lagging up. All right, the high on the screen is actually 3782. All right, so we're fallen from the high of 3782, yeah, all right, okay, to 3774 right now. Yeah, okay, so this is definitely going to drag the market. So if Tesla doesn't turn, yeah, all right, we will have a very, very valid concern over here. Yeah. All right, now my EXC is filled, everyone. This is the reason why I say I don't chase. All right, now, so all of you can verify. EXC filled, sold 3 contracts at 95 cents over here. All right, so this is the reason why I said this. Right, it is, after all, from experience, of course. Right now, and my students will know this as well. Or I apologize for that. Let me try to erase it. All right, thank you for letting me know. Yeah, okay, all right, now, so it's filled. So when the market is on a down move over here, we don't have to chase the stocks, yeah, all right, or our trades over here, all right, so we don't have to chase it. So let me record this. This is trade 40. trade 40, EXC. I'm trading 16 of April. That's right, 38 puts. Okay, I'm trading this on 5th of March, and I'm pocketing 0.95. Right, so I'm doing this on 3 standard contract trades, all right, and it will add $285 into my portfolio in cash flow, right, and my margins is going to take up 11,400, just in case I have to pick up 300 shares of EXC, right, at $38 a piece. Now, so my portfolio exposure has gone over 80,000. Yeah, okay, now, so Wave Rider, you can see why I needed to close the March VIX position. All right. Otherwise, I'm going to be, fully exposed, and I may miss out taking on some more opportunities when the market comes off. Yeah. Now let's check out the ROIs over here on this trade. Okay, so we are making 95 cents divided by $38 of investment. That's 2.5%. All right, 2.5% for 7 weeks. All right, so we divide this by 7 times 52. Is it 7 weeks still? That's 41 days. No, it's 6 weeks now. Yeah, all right now. So I'm going to divide it by 6 weeks. Right, and then annualize it. Yes, we have crossed over 21%. Right now, so that's our aim over here with a portfolio. Even if it's cash secured naked puts, right, we will still generate a 20% ROI on the trades that we take on. So EXC definitely fulfills the criteria. All right, this is done. Now, so let me answer Wave Rider's question, and then we'll end off today's session. Now, so his question: if the market continues to fall, the volatility index will go up. So selling puts over here will become reduced in value. Now, what he means is that the premiums of the put options, all right, will see the value drop, like what we saw happen in the March contracts. All right, so what you're trying to say is we will not be taking on more risk. Now, so the question then is this, yeah, right, like I said over here, all right. Now, so the thing is, if you're assuming if the market goes down, right, but markets are known not to be controlled by anyone. Right, so I'm always, with every trade that I take, all right, I'm always assuming that I must always leave room, right, for errors, right? So if I'm wrong, I don't want to be so heavily exposed on the VIX. Yeah, okay, now, so that's the reason why I rather close, I realize a profit, and then I reopen it again, right? Why bother to be greedy, right? Why bother being greedy for the final 20 cents, right? Why bother being greedy for the final 20 cents, right, where I can cop it up, right, with the 85 cents over here? Right now, see, when I went to 20th of April, right now I'm trying to make back this 20 cents that I'm paying out, because we took 60 cents for our March trade, right? But for the next trade that I'm taking, I actually pocketed 85 cents, right? So I actually accounted for the 20 cents that I'm paying out right now. Yeah, okay, so there are many ways that you can play around with the option trades that you select. Yeah, okay, when you actually start trading them. Yeah, okay, and with our mentorship programs, that's definitely something that we put out over here, and we teach our students to recognize and identify good trades. Yeah, all right, now, so I'm gonna end off today's live session on Facebook over here right now. I've overran it by half an hour, but all's good. Yeah. All right, now, so if any of you are new and listening to us for the first time, and you like the idea of selling options, and let's say you want to do the VIX trades and you want to do the EXC trades, right, but you want to put up only 10% of these exposures. Yeah, right now, so that means you want to do the for example, the EXC trade over here. It's probably the same trade, but for about $1,000 to $2,000 in investments, instead of coming up with almost close to 11,500. All right, think and consider about mentorship programs available. If you want to find out more details of what we have available to you, right, send my team an email. All right, the email address is what you see on the screen right now. Right, and they'll be more than happy to respond to your queries over here. All right, now, thank you very much. I'll see all of you in next week's Facebook live session, everyone. All right, and I do hope that I've added, more knowledge into your pockets over here with the sessions that we have run. All right, and I look forward to seeing all of you next week. Yeah. All right, so we'll come back and we'll see how our portfolio does again next week. Now, thank you very much for the loyal fans over here and supporters that comes in every week, week in, week out. Now, remember, if you can do us a favor, help us share this video out, click the share button, all right, and, let more people know about it, and, help us spread the word. Yeah, all right, thank you very much. Thank you, Anthony. Yeah, all right, you've been great. Yeah, all right, now, welcome, Adeline. All right, now, I hope I've, improved your knowledge and understanding over here. All right, welcome, Junwei. All right, good night, everyone. Bye bye.